Hello everyone, Mike Greenley here with Tradition Companies. It is Monday, March 16th, and today we're going to be talking with Eric Hendrickson, the president of Tradition Mortgage. Eric, welcome. We are both obviously practicing good social distancing here.
Yes, indeed. Better safe than sorry.
Absolutely. How's the current news right now impacting the mortgage market?
Well, certainly over the last several weeks, the kind of the virus fears and kind of the economic fallout globally have pushed a tremendous amount of money into the kind of the safe havens of the bond market, which includes buying mortgage-backed securities, and ultimately the vast majority of these mortgages that we originate all end up in mortgage bonds. That's where the money comes from. So that global push to safety has definitely resulted in lower interest rates across the globe, and certainly for mortgage rates.
So the Fed fund rate goes to zero. Exactly what does that mean? Because a lot of people don't actually know the details of something like that.
Yeah, sure, and we've sent out some correspondence regarding that to our clientele. But really, at the end of the day, the Fed funds rate is what the Federal Reserve actually cuts, and that's basically a short-term borrowing between banks. So really, it doesn't tie directly into mortgages whatsoever, but it does impact commercial loans, home equity lines of credit, bank loans that are basically held in bank portfolios. So the idea is to make it cheaper for individual and businesses to borrow money to basically facilitate economic activity, but it really does not directly relate to mortgages, because again, the money for mortgages comes from mortgage bonds that are traded on the open capital markets, and really the pricing for bonds overall is going to be dictated by investor demand, and investors are looking at exactly the same things the Fed would be analyzing too. Where is inflation, where is the economy going? So think of it as the bond market really has a head start on rates. So by the time the Fed makes any kind of cut to the Fed funds rate, by and large, that pricings are reflected in daily interest rates for mortgages.
As things continue to be fluid here and there's always new information out all the time, what are some of the key factors that you're trying to concentrate on going forward, just this week?
The biggest issue that you're seeing in the mortgage market is just limited bandwidth. Just like I was kind of talking to people in our office, if everybody goes to Target to buy toilet paper and Purell, there's only so much of that available at any given time, and when it's gone until another shipment arrives. You can't purchase anymore. And same thing with mortgages. There's not an infinite capacity for mortgages to be closed at any given time, and what you're seeing is a major backlog really with all lenders that are just saying, hey, we can't take any more business. You're seeing posted rates by some of the largest lenders higher than we've seen in over a year, because they just have to slow down that incoming demand. With the remote working recommendations, you're finding that the human resource capabilities on the mortgage side are being significantly reduced. So that's going to push turn times even further out. And also you're starting to see clients concerned about coming in for closings, having appraisers access their house. So just really the ripple effect that we're seeing in the mortgage business, because we do have so many different individuals and third parties involved in the process. So we're going to continue to monitor that. Certainly at Tradition Mortgage, we're doing everything we can to keep the process rolling smoothly. We're using all the technology we have available to continue to transact business and limit human interaction as recommended by the government and health officials.
How's that look for your company?
We're going through a lot of protocol kind of discussions as to how do we interact with each other. I feel like are ahead of the curve, because we do have remote work capabilities that we've set up for employees, in advance, just really for more employee flexibility. But so we're really feeling fortunate that we're kind of ahead of the curve as far as our ability to transact business on a remote basis. Due to the size of our company, I feel like we're in a pretty good spot where we're big enough to create some great pricing for our clients, but we're small enough where we can be nimble and flexible, where I know some of these mega lenders are really going to have a tough time reacting. We're certainly going to be moving faster towards more of a true e-closing to help us during these times, because we just don't know how much longer we're going to see this work disruption, but it looks like it's not going to be ending anytime soon. We'll definitely keep people posted. We appreciate the business, and we're going to continue to do everything we can to take care of your home loan needs. Appreciate it.